Hello, everyone. This is Nick Burton with the Small Business Development Center in Northern California. The long-awaited uh, project operating budget for home-based webinars. Again, I mentioned in our original webinars discussing the grant programs that we would be preparing these for your assistance. So I think we've got them out in the nick of time. I'd like to show you a few things about this. First off, the whole entire purpose of this is to upload a project operating budget here on the application website for the major infrastructure grant. Um, so item 58.1, upload projected operating budget for new site. And you'll notice we can upload an XLS or XLSX file. So as we get into this, this is, again, the intent of this. Also, you theoretically could use the same operating budget for your operating budget outline current revenue and expenses. I would suggest generating a profit and loss statement from your actual income and expenses for last year. 2022 would probably be the best year to work with, but we can use that here. So notice here it says we can use Excel files, and up here, the operating budget, it doesn't mention XLS or LSX files, which is, again, files from Microsoft Excel. So you may have to print it to PDF or convert this Excel document to PDF. But okay, without further ado, we'll get into a quick little background here. Again, I'm Nick Burton. I work with the Northern California Small Business Development Center. The SBDC is a nonprofit organization that provides no-cost advisory services to all of our clients throughout the country. In fact, we have hundreds of branches throughout the country. I believe we're the largest private consulting organization in the country. We're primarily funded by the Small Business Administration, the SBA. We act as their public outreach arm and to reach clients like you and make you aware of all the assistance that's available, not only through the SBA, but through our advising centers. And we have advisors that specialize in everything. This could be from website development to human resources, repairing credit, forming a company, obtaining a loan. And in fact, that's where my specialty lies, is in the finance side. I work with a group called the Finance Center, and my focus specifically is on construction and real estate. While I work with things like business acquisition and really all sorts of financing, this is sort of my bread and butter. And this spreadsheet specifically was developed, again, to help you apply for the grant, but also the history of the spreadsheet, this budget in general, it predicts up to 3 years of business operations, and this can be used as financial analysis for an SBA loan or a community advantage loan, or really any loan that you're going to get from a bank. They're going to want to see that your business can make money and you could prove that you have the ability to pay back the loan. So with that in mind, again, that's why this was developed, and I tried to make it as easy as possible. So I'd like to go over a couple of basic spreadsheet rules. Again, this is using Microsoft Excel. And for those of you who are not familiar with Excel, it may be a little complicated, but you should be able to get access or use the same file using Google apps or the Office suite that Google provides, which includes Google Sheets. If you have a Gmail account, you should be able to use that for free. So this file can be uploaded and used in Google Sheets, and all of the same inputs should be compatible within Google Sheets. So anyway, we'll leave it at that. If you're not familiar with Excel, Excel is a spreadsheet that is basically like a giant calculator. It's an absolutely fantastic tool. And you'll see right here, I've separated this spreadsheet into 3 years, year 1, year 2, and year 3 of predictions. And these are tabs down here at the bottom that are colored in green. That's year 1, year 2, and year 3. We're going to focus on year 1 for now because you're only really required to provide 1 year of financial analysis. Now, this looks complicated, but it's actually less complicated than it seems. There's a lot of information here. This was developed for home-based family childcare facilities, and it doesn't matter whether you have 1 kid or 14 kids. You can use this budget. And outside of the years 1, 2, and 3, we have a loan calculation tab in case you need to get a loan, or you might, let's say you do or don't get the grant, but you want an additional loan, or through the process of applying for the grant, maybe you aren't funded, but you can run the numbers and say, wow, well, maybe what if I actually go get a loan? Is it a good business proposition? Does it make sense for me to try and expand my business outside of this grant? And in fact, in conversations with several family home operators, we found that out, that they said, wow, if I don't get the grant and I have XYZ amount of funds through a loan, I can make a lot more money. So we'll run a little analysis with that as well. We have the inputs page, which is really, I would say, the most important page that we're going to have here, we're going to use. The inputs page, like many others areas, contains these gray cells in here, and you'll notice I'm changing the color. Each little area, a spreadsheet, by the way, we have rows, which are labeled A, B, C, D, E, F, G going across. And then we have, we have columns. These are columns, which are lettered alphabetically. And then we have the rows, which are numbered. Each place where a column meets a row is called a cell. And areas here that are in gray are areas where I have designated it as a place where you're going to input information. So that's where you're actually going to type information. Areas that are white are areas that you should not type information. Rule number 1 with any spreadsheet: when you get a copy of this file, make another copy. Make like a backup template copy in case you make a mistake or you enter something in the wrong cell. You can always go back to your backup copy. In fact, I recommend frequently saving about every 10 or 15 minutes. If you have 20 versions of this budget or if this spreadsheet, and you want to go back in time to maybe 20 or 30 edits ago where you're editing and inputting information, it's always good to continually back up. And you can do that in Microsoft Excel by just coming up here to Save As. You come to the File tab in the top left, and we're going to click Save As. And we're just going to do this. I'm going to put, it's 3 years projections. GS stands for Google Sheets, so it's a Google Sheets compatible document. I have Home 1. I'm going to put Home Live 1 and hit Save because we're live doing this. Okay, so now let's get into what these tabs represent. In the Inputs tab, I have spots for 14 children, child 1 through 14. So if you have, depending on how many children you plan on having with the grant, or how many you currently have, if you're looking at a budget for your current operating business model, we can edit it here. This is the monthly rate per child. So how we add a child is simply by adding numbers in here. So right now I'm going to take these and I'm going to put them all to 0. We're just going to have 6 children right now. Actually, let's do 7 children. So let's say we're licensed for up to 7, and this is how much we make per child. Now, I created a little income calculator here. You can obviously use your own calculator. It's fine, and you know what your numbers are going to be, how much money you receive per child. But I created 3 categories: 0 to 2, 3 to 5, and really, I think I should call this 2 to 5, shouldn't I? So it's like infants to toddlers, and then we'll call it like general preschool age, 2 to 5 years old, and then I have school age children. Now, obviously, school age is not something that we're going to want to be highlighting as a part of this grant program. You don't get funding for adding school age children, but what if you happen to have 1 or 2, or you want to look and see what that would look like in the future if you were to add school age children? You can add them here. And I put 2 categories. I put subsidized and private pay. So you'll notice from here in this column where it's 0 to 2, the subsidized rate I have at $340 per week, private pay at $425. This next column is the yearly amount that you, in theory, could earn, or you would receive per child with both subsidized and private pay. And it's merely just taking the numbers in these gray columns here and multiplying it by 52 weeks a year. And then the average monthly is dividing this annual yearly amount by 12. and obviously some months you're going to have 5 weeks maybe where you you earn revenue, and others, you don't. Months like February, etc. Just depending on how the year goes, it's a lot easier to just do an average monthly rate, which is what this number is here. Anything you enter in any of these cells does not affect what you enter over here. It's just a simple calculator for you to make an adjustment. So let's, just for fun, say that we are only doing infants, and that's where my first 7 are, and they are all subsidized. And let's say that subsidized amount is $370. So I'm going to enter that in. And that has changed this number over here, my average annual amount, to $1,603.33. So I'm just going to type in the numbers, 1603. And I can keep typing that in, 1603. Now I'm going to share a little pro tip with you with Microsoft Excel. We're going to zoom in here. You hopefully should be able to see that I have this cell highlighted here where it says 1603, and there's a little green dot here in the corner. If I grab that dot, hold my right mouse button down, right click on that dot and drag it down, it will fill, and let go of the mouse button, it will fill these cells with the same number. Another way in which you can do it is copy, hit Control C and Control V, and that should do the same thing. So now let's just go ahead and build a family care home. So we're going to do this. We're going to say we have 7 infants, and let's say the rest are going to be age 2 to 5, and we're going to do 3 of those subsidized, which would be, zoom out here, 1,061, 1061, 1061, and 1061 per month. And then the last children will also do, but we're going to do private pay at 325, which is 1408. So 1408. I'm going to click on the cell and I'm going to drag it down. So now we've applied for this $100,000 grant. And let's just assume that we're going to need all 100,000. We had 7 kids. Now we're going to have a total of 14. And we've inputted what we think the revenue is going to be for those kids. Now we're going to come down here, and I'll show you the rest of the inputs down here. These are also really just more of a calculator for you to understand how much it costs monthly and annually to hire an employee. So I have what I call a lead teacher and an aide teacher. This is something we use for center-based facilities. I decided not to change it for the spreadsheet. This just gives you kind of like employee 1, employee 2, 2 different pay categories. Let's say this employee is $22 an hour and this employee is $17 an hour, as we have in these inputs here. That will show what their monthly and their annual salary will be. That excludes workers' compensation and any payroll taxes that you have to pay. That's all calculated in here automatically. But let's just say that you can pay an aide $15 an hour. That's the rate. Actually, that's less than minimum wage, $15.50. So that's going to cost you $2,600 a month if somebody's working full-time, and $32,240 annually. Let's say they're $17 an hour. You just enter a number in here, and it's going to change what these numbers reflect in here. You're going to use these numbers later to enter in the actual costs of your employees. So I'm not going to really worry you about this time calculator down here. It's not super applicable to this. If you want to play with it, you can. This just shows if you were to work somebody, well, we'll just look at it really quickly. If somebody were to work 7 hours a day for 4 days a week for 52 weeks a year, the yearly hours work would be 1,746. So you can actually come in here, for example, and say, well, that's my one employee at $17 an hour. They're going to work 1,456 hours. This is how much they make monthly. I have a different way of dealing with this. If you want to play with that, that's fine. That will allow you to really customize exactly how much you think you're going to need to pay your employees. But I think for now, you're just going to use these really as just calculators. They're not going to affect the data in the yearly budgets. I'll show you how we enter those. But this is really the most important area right here, the child inputs. It allows you to completely customize how much you're earning per child. Now, what if some of these children, this is how much you could earn from them weekly, but maybe some of them are only there 5 hours or 4 hours a day, or you're not getting as much reimbursement for the subsidy as is shown here. You can customize the exact amount for that child you get here, or I'll show you an area where we can customize it on the main sheet, the main annual sheet. So now let's move over. Once you've got this entered in, how many you plan to have? Well, actually, let's just for fun, let's delete this last one and say that we have 13 children total. Now we're going to go over to, this may seem overwhelming, but we're going to go over to year one. This is really the only year you're concerned about for these projections. Everything that you enter in here, look at this number, 1603 for child number 1 through child number 7. You're earning 1603. Child number 8, 9, and 10, we're earning 1,061 per month. Check this out. Child number 1 is in this row, and we show that same 1603. Then we're going to come down to, it was child number 8 in this row here. You see that 1,061. What I also have is a percent occupied number that you can put for each month. So let's say, for example, that child number 1 isn't going to come on until month number 4. I can just put 0% in there. They're not going to be there any percentage of the time, and it will affect this line down here, which is I have class 1 total income. That actually should be labeled child 1 and not class 1. So I'm going to fix that before I send the spreadsheet out. This should be child 1 total income. So what you'll notice from here is that because we put 0% in percent occupancy or percent occupied, there's no child there. What if they're going to be there? You have the potential, if you're billing the full amount for them, you have the potential to earn 1603. What if they're there 50% of the time? We're just going to enter in a little 50. Check this out. We now have 50% entered in, and those numbers have changed accordingly down here underneath this row under income. So I'm just going to put these all back to 100%. Okay. And you can do this for all 14 children. You have the ability to enter their percent occupancy and their revenue. Notice child 14 here, where we got rid of them. We're not hosting a 14th child here. We have $0 in. Let's just say it's $500 a month is what we get. You're going to go back to year 1 and look at, there's the $500 a month. It's just populated in the spreadsheet. So with these inputs, we very simply are able to get a projection of what our total income is. Here is a summary of the total income. So notice I have in white columns here. They're not gray, but they're white. These are automatically generated. And then I have an area for food revenue. This is maybe you have a food program like food reimbursement. I'm going to go ahead and I'm going to put 0 here for food reimbursement. This is where I would enter in any money you think you're going to get for food. It's totally up to you as a daycare provider to understand what those numbers are. I really have no idea. Some people provide food, some don't. Some have it as a cost. Some people get reimbursement for it. But you know your business model, so you would enter that under food revenue there. And then I have some blank sources of income. Maybe you offer other services that cost extra. Maybe you bring in somebody to do music or some other type of program that you've got. Feel free to enter in any source of income here that you've got. And you would just manually enter it in for each month. So let's say new source of income. I'm going to call this music. I'm going to come over here. Let's say that brings an extra $200 a month. Check this out. Remember that trick where we dragged the little, we could manually enter in 200. Enter 200. Or I can just grab this cell and that little green dot in the corner. I can hold down the mouse and drag it all the way over. And now $200 comes all the way across. So now look at this. This is what's called costs of goods sold. This is really used in most financial models as a number before you look at your gross profit. And you primarily would see this in service-oriented industries that have, I'm sorry, not service, but like in product industries. And I used the example in another webinar of hamburgers. So if you're selling a hamburger for $5 and the meat costs $1, the bun costs $1, and the condiments cost 50 cents, you have a cost of goods sold of $2.50. So that's where you would enter that in. Now, we're not selling hamburgers, it's childcare. If you think there's anything specifically associated in your business model outside of employees, but direct costs for any one specific child that you're hosting that may be different than you might have with another child, you can enter those costs of goods sold here as a manual entry. I would discourage you from doing that and put the majority of your costs here in the operating expenses category because you are not providing a product. I put that in there just in case you want to add anything in costs of goods sold. You're more than welcome to do that here. And I need to change this to child 1 through 14. I'm noticing this live in the webinar. So I will fix that before I send it out. But here's one applicable point here. Let's say you do have $1,000 a month in food revenue. We're going to go ahead and do this. And in food revenue, we're going to come down here to food under cost of goods sold in the food line item. Let's say that costs you $500 a month to provide food, but you're selling it for $1,000 a month. You're actually making money on food. And let's call this music. This is probably more common for center-based locations, but I'm just showing you how this works. Let's say music, you hire a music teacher to come in for $100 a month, and you're charging $200 a month for it. So you're making $100 profit. That's where costs of goods sold would be applicable. If there's any other services that you as a part of your business want to customize, you can add them in there. That gives us our line item here called gross profit. And these total themselves up. So you're going to have all the total of all of these, the revenue here in these white boxes are going to total up in these columns on a monthly basis, plus any additional revenue. And you'll see, for example, $19,828 is what we're predicting per month revenue. And then that will be you'll subtract your costs of goods sold and you'll arrive at your gross profit. It's on a monthly basis. So this home, this family childcare home, has the potential to earn here $230,736 worth of gross income. Now, obviously, this is the one thing we know about budgets is they're probably going to be off a little bit. But now we've got a pretty good estimate, realistically, of how many kids we're going to have. Now, let's say that you realize, well, I'm going to have child 1 through 7, they're already occupied. But child number 8, for example, we're just going to come in here. And as we're growing our business, maybe for the first few months, we don't have child number 8. And maybe for the first few months, we don't have child number 9. We're just going to adjust our percent occupied here, occupancy. And we'll do the same for child number 11. Percent occupied. Let's just say it takes a few months for us to generate that business. Now, as we come down here, you'll notice, our revenue has dropped the first few months, and then it ramps up. So you can customize that however you want to customize it. Now, I'm hoping the majority of you have waiting lists or will be able to fill those children. By the time your construction is done, you'll let the community know, I can take on 4, 5, 6, 7 more kids, and that won't be an issue. But for purposes of this discussion, I just want to show you how the spreadsheet works. So now we're going to come down here to operating expenses. This is the most, I would say this is probably the most complicated part of the spreadsheet here because it requires you to cross-check and do some manual entries from your calculator over here in inputs. We'll show you how this works. So payroll taxes are automatically calculated at 7.6% of the total cost of your payroll. And if I come here to payroll taxes, that includes your owner's salary or the director, all your teachers, and any other extra employees you may have. It takes the total that you're paying them monthly and multiplies it by 7.6%. That's what this number is up here. These numbers are up here. So you don't need to enter anything in there. Then we've got our actual teacher's salary and owner. So I put owner's salary, owner 1 and owner 2. Maybe you have a partner in it in your business. I don't know how exactly that works, but I put a place for 2 distinguished owner salaries. The interesting thing about the owner's salaries is they are exempt from workers' compensation. That's why I have a separate category for them so that you don't pay work comp fees. You'll notice down here underneath work comp, column or row number 92, $88 a month in work comp. That is 2% of all of your employee salaries, excluding the directors or the owners. So I wouldn't change either of these numbers to 7.6 or 2% unless you know your work comp rate is higher or lower. So what I've got here, let's just say we've got 14 children right now, or 13 children. So we know at the 13 children, we're going to have a director or an owner. We need to input your salary, but we're going to do that at the very end. The next thing we need to do is say, well, how many other teachers or aides are we going to need? Well, I'm going to need another full-time teacher here. So I have that under teacher 1, and you can change the name of this. We're just going to call this aide number 1. You can type in the name here. Even though it's not gray, you can still type in when something's labeled if it helps you better understand who you're talking about. Or let's say your teacher's name is Jennifer. Okay, so we'll have Jennifer. So that way it helps you more better identify who it is. You can manually enter in the wages here if you want, but I have created something I think might be easier. If you would prefer to manually enter it in, you're just going to type in the wages in this area. Or to make it easier, you're going to put in their annual wage here. So we're going to go to inputs, and let's say that Jennifer is a lead teacher. She's a little more qualified. We're going to pay her $22 an hour. Her monthly cost is going to be $3,813.33. See how we do this? 22 an hour. Let's say it's 21 an hour, just for fun. She's going to work full-time, 2,080 hours a year. So 3640 is the number. So what we're going to come in here is we're going to go for the annual wage in this cell right here. We're going to enter in 3640 underneath this wage category. I'm going to go ahead and highlight this so you can see it. All right, here you go. Underneath that yellow wage, 3640. Now it is put 3640 annually here. You see that? Now what we can then do is come over here to this percent number, and let's say they're working full-time. We can just put them at 100%. So 3640 times 100%. What happens if just Jennifer gal only worked 90% of the time? Oh, those numbers go down at a 3276. So here's where this is applicable. Let's go to our next person here, which is, we're going to call this aide 1. Aide number 1. And the aide number 1, we're going to pay $16 an hour. Oops, not $1,600 an hour. That would be great. And their monthly number here is $27.33. So we're going to go and enter that 2733. Okay. And let's say they're going to work probably 60% of the time, part-time. So they're not going to be there all the time. This is where you can enter a part-time employee. And you can guess and check and enter in whatever percentage you want based on what you actually are paying somebody or what you think, the amount of time you think you're going to need them. So those are our two employees that we have right there. The next thing we're going to discuss is how the owner's salary plays into all of this. Actually, before we do that and look at the owner's salary, let's look at just a few other expense categories here. So coming down here, we've got outside of our employees, which I put, by the way, 8 different teachers in here total. So that should be more than enough for any home-based business, but I also included some other employee categories. I think 10 total employees. So again, probably a little overkill, but you never know. Maybe you'll have a lot of part-time people and you want to plug their cost information in there. Another thing that I'd like to highlight too is I don't know how your individual business model is structured, whether you're a sole proprietorship, a limited liability company, or even a corporation. I would say probably an LLC and a sole proprietorship are going to be the most common. So I show payroll taxes in here, which is an accurate reflection of what it costs for you to have employees, with one exception. That is, if you yourself are an employee, let's say you're a corporation and you're paying yourself, there's additional payroll taxes that are going to come out of your check that you're going to have to calculate when it comes to the owner's salary, which aren't reflected in this owner's salary area. That's another, we'll call it 7.6%, but we'll touch on that as we get to the bottom line here. But to get to the bottom line, we're looking at other expenses. So for example, the aforementioned workers' compensation. In this example, I showed in office supplies or general supplies. I put $500 a month here for a daycare. Maybe that's a little low, maybe that's a little high for you, but I imagine there are quite a few Costco runs or other things that you have to make to operate a daycare. I have advertising of $6,000 a year. I think that's probably a little high in here, but I'm just trying to show you how we have a line item for advertising. And really, I'm going to tell you right now, if you happen to get this grant, there's no better time to spend some dollars on advertising to get some publicity about the fact that you're going to be providing some remodel to your home, and it's going to allow you not only to take on more children, but to provide better service. And other things, licenses and taxes, utilities, rent. So the rent area here, that is tied to the rent tab over here. And you're going to have to kind of work backwards with this. Chances are, if you're applying for this grant, you own your own home. If you happen to be renting your own home, then this is where you would calculate your rent. So this is really more used for commercial environments here. So you can use it, but it's based off of square footage. Well, usually your home-based rent isn't based off square footage. So you would have to, actually, what I recommend doing with rent is, if you have rent, you can just go ahead and manually enter numbers in here. Frankly, that's probably going to work better. So I'm going to go ahead live here and just change this rent to gray. And we're going to go ahead and let you just enter that in manually. So it's up to you whether you want to include whatever portion of your home you may be writing off for your business. I encourage all of you to talk to a CPA or tax advisor. Let's say, for example, that your home mortgage payment is, I don't know, $3,100 a month. Your CPA should be able to tell you how much of that $3,100 you could write off, and that would be a good number as a business expense to write into here, into this rent category. So we're actually going to go ahead and highlight all of these, right-click and click Clear Contents. And we're going to make them dollars. And I'm just going to put 0 for now across the board. So let's just go ahead and make that manual entry, whatever your rent ends up being, or your house payment. But I think it's really important for you to factor that in there. If you're not deducting a portion of your rent or your house payment, you're definitely paying more in taxes than you should. So I put general liability insurance and or auto insurance, if that's associated with your daycare, a line item there. Software, accounting and bookkeeping, tax filings, that's for a professional. Accounting and bookkeeping is like for your monthly bookkeeping. I don't think it's going to be quite as expensive as I show here at $500 a month. And maybe some of you have your bookkeeper also do your tax filings. I have put in here an additional $1,500 a year to have a CPA prepare it. Again, this is all, every single one of these areas can be deleted, or the numbers can be deleted, and you put in numbers that work for your business. I also have another, close to a dozen other expenses here, which you can put line items based on your specific business that you can add in here. And the more information and the more detail you put in, clearly the more accurate your predictions are going to be. So coming back up to our gross profit up here, let's take a look at the total amount is $220,860 is what we're predicting with our 13 children that we have. After our expenses of $100,840, those expenses primarily consist of employees. You can see we've got, close to $60,000 or more in employee expenses. And that shows our net income or loss here of $120,000. And it uses this term EBI, TDA, earnings before interest, taxes, depreciation, and amortization. That's a number that a bank might look at. But ultimately, what you need to be concerned about is this number positive? And if so, how much do I have here? Now, from there, we have what are called deductions. And these are non-cash deductions. So they're money that you write off that maybe, not all these are non-cash expenses. Loan interest, I guess, could be considered one, but these are additional deductions outside of your normal expenses. One of them is called depreciation. That's a non-cash expense. I'm not going to get too far into the weeds there, but if you buy a bunch of major assets, let's say like a car, for example, and it costs you $40,000, you're not allowed to write that whole car off in the first year. You can only write a portion of it off or expense it based on what the tax law says. So this line item here would be for depreciation. Maybe you actively are depreciating assets now and you're working with your CPA. If you don't understand that or know about it, feel free to talk to an SBDC advisor and they can review this spreadsheet with you or any other spreadsheet and try and explain it more thoroughly. Loan interest, I actually have a loan factored in here just for fun as a part of the process. And you can't deduct, again, the whole amount of your loan, but you can deduct your interest. So this is where if you use the loan tab here at the bottom, this is where data is pulled from there, and this is where your interest is calculated. So you'll notice your net income is $120,000, but your taxable income is only $116,000 here. That is because of these additional write-offs. So then I show your net income line item again, and then we show your loan payment, the actual payment you're making every year, and which comes with the bottom line is cash flow after financing, or how much do you actually have to spend at the end of the day. We show this business before you pay yourself as an owner is making $112,000 a year. Pretty good business. Now, if we come up here, let's say you're a corporation, oftentimes a CPA, depending on how you file your taxes, may advise that you take a salary rather than just taking all of the money coming into your company as what they call pass-through income. So if your CPA advises you to take a salary, this is where you would put that number up here underneath your salary here. And I think it's a good idea. So let's say we know you have the capacity to pay yourself $112,000, so you can take a salary there, however much you want to take. You're going to have to consult again with your CPA based on whether you're a sole proprietor, an S corporation, or an LLC as to what works best for you. But regardless, if you leave the salary blank, it shows how much money you're making. So I hope this as a whole, kind of you can see the big picture here. Now, here's something I wanted to point out. Um, let's say you don't get the grant and you still want to expand to a larger home. Let's say you have a small facility, you're licensed for 7 children, and let's say you want to get to 13 or want to get to that 14, and maybe you can host 12, 13, or 14 kids. Let's say it was going to cost you $200,000 in construction to do that. Well, we can go over to the loan tab. We can very simply enter in $200,000, a $200,000 loan. Let's put it in interest rate. I'm just going to put 8.5%. It's awfully high. And a 10-year loan term. It's going to result in a $2,479.71 per month loan payment. But here's why spreadsheets are so great. We enter this in. Now we go back to year 1 and we look at our loan amortization. And our net income is now, instead of $112,000, it's now $90,000 per year. But from my perspective, at least as a business advisor, if this was a really accurate reflection of how much money you're making as a business, this is pretty good use of debt to go out and get a loan in order to grow your business. So this is where we can use this tool outside of the grant to help you determine whether you're either one, financeable, or if you're going to make any money at all. So again, I hope this overall spreadsheet helps. I'm going to post this on YouTube, so all of you should be viewing this on YouTube. If you've got any questions, leave them in the comments below. I'll try and check. I appreciate, again, your patience on this. I'll try and check the comments and reply. If any of you find any errors in this spreadsheet, I'm going to give my big disclaimer here. This is really kind of a draft. I tried to hone it, but as you can already see, there's some things that need to be relabeled. If there's any errors that you find, feel free to post and I'll make any changes necessary. And if you think it would be helpful for me to show you all how to use Google Sheets, maybe do a live edit or a webinar with this or another spreadsheet, showing you a little bit about the free application instead of Microsoft Excel, I would be certainly happy to do that. So with that in mind, if you have any questions, leave them below. And as a reminder, you're going to be using this sheet first and foremost to determine whether your business is profitable. And second, to upload projected operating budget for the new site. That's the place you're going to use it. And I will go ahead and just come back here to the left monitor overlay. If you want to save this as a PDF, if you hold down your shift button or your control button and you click on year 1, year 2, and year 3, that will print 3 years of tabs. If you just click on year 1, which is what you need, that'll print 1 year. If you were to hold down control and click on year 1 and 2, that would print year 1 and 2. And you just come up here to File and Print. And if you have an Adobe PDF driver loaded, then you can print it to PDF. If not, you can click File, Save As, and then the type of file up here. Here's the name. I'm going to save as Live Final. And it's an Excel workbook here. You can also choose a PDF as an option here if you want. I'm going to go ahead and save it back as an XLSX file. But that is where you would convert this to a PDF. I will say one other final thing. I'll leave you with this. If you want to look at more than 1 year's worth of calculations, you have to do all the same manual entries in certain areas for year 2 and year 3. What percentage of the do you have a certain child or not? Your employees, when you're adding and subtracting employees, and then of course all your other operating expenses as well. You're going to want to enter those in again manually for each year. And a final quick tip, I guess one more. I'm going to hold down the control button and I'm going to click on year 2 and year 3, and you'll see down here at the bottom, I've selected to see year 1, 2, and 3. They're all highlighted. I'm going to click off of them. Now, none of them are selected. Now year 1, I'm going to highlight year 2, holding the control down in year 3. Now if I enter one number in any one cell, it's going to make that same change across the board. So we're going to go, for example, food expense. I'm going to put $500. I'm going to put $1,000 for the first month. Year 1, it's $1,000. Year 2, where is food? It's not there. I'll be doggone. I'm sorry. Yes, it is. It's right underneath here under food. I just had it zoomed out. So it'll make the same change to the to that cell on all 3 sheets if you select them all together. So that's a way to make edits more quickly. You really don't need to use year 2 and year 3 right now. And in fact, if you find yourself in a position where you're filling out a loan application, you're definitely going to be a lot of money and time and effort ahead if you're working with an SBDC advisor that can help you through that process. So, all right. Sorry if this is a little overwhelming. It's a lot to digest, but start playing with these. It's going to get you 95% of the way there, I think, and getting a really good financial analysis and having an accurate picture of what your business is going to do. So again, if you have any questions, feel free to leave those in the comments down below. You're welcome to subscribe to the YouTube channel. If you're interested in getting some more data, I think I'm going to be posting a few more videos over this next week on the grant program itself. And if you're interested in getting, again, a tutorial on Google Sheets or using Microsoft Excel in general for these type of programs and for this type of work, for business in general, I'm happy to create some more content for you. So look forward to hearing from you all soon. I wish you the best in your efforts, all working last minute to try and get this grant, apply for this grant. So we'll talk to you soon. Thanks.